But look at what's happening on a year-to-date basis. The price of gold has visibly underperformed. It's down some 20%. So the bulls, yes, they seem to be in the driving seat this week, but for how long? Not very long, according to Credit Suisse. A near 3% continuation of the current bounce is probable over the next couple of days, but gold will struggle to challenge the late August highs above 1,400. OK, back to physical demand. It seems to be quite robust coming out of China and India. It's a key driver this time of year. As some even say that buying is so robust that it's outstripping the net ETF outflows. But exact volumes, as we've been talking about, have always been a source of contention. Canadian hedge fund manager Eric Sprott says the World Gold Council is lowballing emerging market gold demand. He claims that demand outstrips mine supply by approximately 3,000 tonnes on a global basis. So by that standard, gold prices should be much higher. The World Gold Council says piffle. They stand by their figures and their methodology, and Sprott's use of import data, so says the WGC, as a proxy to measure gold demand is somewhat simplistic. So this is a bun fight that will continue. But Eric Sprott does have a very valid point. It's quite a tough task and a challenge to quantify the data coming out of emerging markets, China especially. Dee can vouch to this.
Right.
And it's an even bigger black box trying to get a handle on the gold flows when you have to consider smuggling, when you consider stocking, destocking, round-tripping. It's very opaque.
But to simplify it, it sounds like he's frustrated with the low levels and all gold investors are right now. They're frustrated. It just cannot seem to catch a decent bid.
You're absolutely right. And I think the reason the bulls are quite frustrated right now is because all the ducks seem to be lining up for a higher gold price. You have a weaker dollar. You have the U.S. national debt that has crossed 17 trillion US dollars. 17 trillion. Let me repeat that once again. And they argue that debt at some point has to be monetized. We could even see QE4. That's going to debase the dollar even further and send gold prices higher. But you continue to see these ETF outflows. So that's a very strong gauge, some might say, that the investors are really not in this market and they don't trust this rally.